Hello, everyone. Welcome to EnerCom's The Oil and Gas Podcast. Today is Tuesday, April 16, so the day after tax day. Did you get your taxes filed there, Aaron?
I got them in.
Excellent. So I'm Glen Parrott, and with me today, my co-host, Aaron Vandeford, who has indeed paid his taxes. So it's been a couple of weeks since we last did this. At the time, the Final Four was, or not the Final Four, but March Madness was just underway and we'd made our picks. And now that the Final Four is over with, Rick didn't do that great.
So I was reading something that it's actually harder to get a perfect bracket than it is to win the lottery in some cases.
Seriously.
Yeah.
And yet somebody always wins.
And yet someone does it. So
I told Rick he needed to change his model. His analytics got him only so far. He did get Michigan State, though, but ultimately didn't end up that way. But that's not what everyone's here for. So let's get rolling along as we kind of go through this podcast. We try and take a look at some of the items that are timely and topical. And given the date and everything, I guess top of that list would be most recent news being Chevron's acquisition of Anadarko, which for those presumably everyone knows about this, but if you don't know, Chevron's set to acquire Anadarko Petroleum. It's a cash and stock deal valued at an astounding $33 billion.
do you have an extra billion laying around?
I don't.
But that's a big deal. It's pretty interesting.
Yeah, it's. So again, the nuts and bolts transaction was valued at $65 a share. I gather what are they saying? Like a 37% premium.
Yep.
To Thursday's closing price. Thursday, April 11, I believe. And really, it takes Chevron from the fourth biggest international oil major by production to the second largest. So that's quite a leap there for a big company. I mean, good grief.
Right. And, Anadarko's obviously no small company. It was a needle mover, but it was a needle mover to allow them to get into the U.S. shale market a little bit in a major way, I'll say. And so when you start to think about, these large internationals and Exxon with their XTO purchase, this is kind of Chevron's version of that many years later.
A decade later or something. When did that take place? Do you know? It was like 2000?
2000, I'm going to get it wrong now,
right.
But I think it was 2010 because it was the very first article we wrote on Oil and Gas 360.
Is that right?
Yeah.
Oh.
And that was the transaction. So I wrote that, but I think it was 2010.
Huh.
But it was the launch of Oil and Gas 360. Little fun EnerCom fact for you.
Well, it's actually pretty cool, actually. So don't know what to do with that quite yet, but well, needless to say, we did write about this one on 360. Part of this deal, what I found interesting was that this notion that I guess Occidental was involved in this, and to the extent that they were also targeting Anadarko, and looks like they were prepared to pay $70 a share. Obviously Chevron's made a strategic decision, or Anadarko made the strategic decision to the feeling that Chevron was the better fit as opposed to the Occidental bid. So I've got no color or context around that other than, I think it's interesting that it was put out there that Occidental's in the mix.
Yeah, and I think that's a real positive to see another player come in, kind of a competitive bid. We're thinking about what's going on in the boardrooms and these decisions. And, Anadarko is going to be a shareholder of Chevron, a very large shareholder.
Yeah.
And so as you start to think about who you want to align yourself with and who may be a better fit, it's not all about the end price. I mean, they still got a close to 40% premium. That seems to fit, but it's not all about the immediate close. And so I think that's an interesting thing to watch.
Yeah. The only thing that I heard was, I guess, on CNBC where they were saying there were quote unquote structural issues with the Occidental bid. And that's just in my mind speculative. We don't know at this point. But regardless, irrelevant. I think that it really, at the end of the day, it's really speaking more towards Chevron's goals. As you mentioned, really their overall Permian strategy.
Mm-hmm.
So get sort of that industrial scale to shale drilling, bringing that to bear. So other things around that, it certainly going to increase the number of rigs. Introduce sort of their efficiencies in their pad drilling and digital analytics, et cetera. But it also, for Colorado, there's this element, this component about bringing potentially, I don't know if it's really bringing that model for Chevron's model to Anadarko's DJ Basin assets here. So the question in my mind is, what do you think? Where do you think Colorado plays into this? If you're Chevron,
it's pretty interesting. I mean, it's the Permian side of it was certainly the driver.
right?
Anadarko has a huge position here in the DJ Basin, one of the legacy large positions, and yet it may be kind of one of those non-core assets for a Chevron, and so there may be an opportunity for another player to come in and pick that type of asset up. I'm not sure who that may be. I've kind of racked my brain and said, who's kind of the size and scale that would want and need that?
Right.
But Chevron might turn around and say, no, actually, this is kind of why we did this. And so without more information in Chevron's thinking, Permian's certainly going to get the capital and the lion's share of capital. When you're starting to think about competing for capital, I think that's where it's going to go. And ultimately, I think in their call for this, they laid out a 2019 plan and capital budget that was ultimately less than the two companies combined. And so that's efficiencies. We're reducing capital spend. But a lot of that reduction in capital spend came from the Chevron assets, not the Anadarko assets.
Gotcha. Yeah, and that's during the announcement. What you heard certainly was focus on Permian, and I don't want to say to a lesser extent, but also LNG. And then it seems off to the side there's they've also got these DJ assets too. So I'm really curious as to how that's going to play out.
Yeah.
Do you just take that and we're going to potentially sell it off in bits and pieces or one fell swoop, or as you mentioned, do you take it and run with it? I don't know. More to come.
More to come for sure, but we certainly saw Anadarko and the way that they dealt with that asset. I mean, they certainly inside their portfolio were allocating capital towards the Permian, and so I've got to imagine that Chevron will continue to go down that path. But I think, I'm sure we'll touch on 181 here coming up, the Colorado Senate bill, and how that's progressed. But that may give a little bit more clarity, a little bit more runway for someone to put some capital to work in and around the Colorado assets.
So you also brought up something the other day. You made a comment on the heels of this announcement where you were like, you know what, this is, you classified this as a quote unquote a healthy acquisition, a healthy M&A deal.
Yeah.
So explain that.
No, so as we exited 2018, we kind of saw, or kind of the middle of 18, we saw these stock for stock deals. The M&A market was starting to heat up, but most of it was to fix structural issues. And so if we think about, Chesapeake and even the Denbury announcement, it was really to fix a debt problem in a public setting or fix a growth issue. And M&A generally should work together, but it was not a premium valuation company going after something where they see tremendous value. It was really some other catalysts in there. And this is the first, and obviously a very large deal, with a competitive bid space, that we have a healthy company in Chevron who's trading at a premium to a lot of its peers. And Anadarko is a healthy company trading at a discount, but really good assets.
Right.
And now we're going to put this thing together. And I think that is fundamentally different and a real positive for this industry and the M&A space moving forward compared to what we were seeing in kind of the mid 2018 timeframe with those deals.
Would you still have classified this a healthy deal had it been Occidental?
Yeah, I think so, actually.
Yeah.
Occidental's another healthy player who's certainly, large and in charge in the Permian also.
Yeah. No, I agree with you. I was, it's like, but does it being Chevron, does that make it a bigger message? And I think so.
I think so. And I think it also, and we've been traveling some. We've been out in New York. You've been down in New Orleans, and we've been listening to some of the shareholder response. This kind of woke people up in a little bit to say, hey, maybe as an investor, I need to look at the space a little bit more because something's happening.
Yeah.
And so I think it's an internal vote of confidence. Internal being the internal industry saying, hey, there's a lot of value here, and we're going to figure out how to make this work. And so I think investors have to take note as well, and they have.
Right. Yeah, it's certainly a different message than the sort of Cimarex Resolute type of deal, where
there was one buyer. It was kind of a seller going to a buyer and saying, hey, well, you want this?
Yeah.
And they said, sure, if you're willing to sell for this. And they said, you bet.
Yeah. Okay.
And I think fundamentally that's different than what you see here.
Yeah, exactly.
A 40% premium with some cash. This is a healthy deal.
Nice. So there you go, everyone. Who knows? Maybe this portends better for 2019. I'm not sure. I think so.
Well, it's certainly
because if you're Occidental, I mean, seriously, you're still potentially shopping around. You're like, okay, this deal didn't work on out. Are you gonna fight that? Or are you gonna argue for it? Or are you gonna go, you know what? There's other opportunities out there that are for us equally healthy and additive.
Yeah, I believe that they're still in the market.
Yeah,
and they'll find something that is a good fit for them. And so our company's ready to go shopping. I hope so. I think there needs to be some consolidation, and certainly the messages that we're seeing in the market and from investors of this free cash flow mantra that we've talked about in our previous shows is requiring a larger company, more production, more of a production base. And so if that's where we're going, M&A needs to kind of lead some of that charge. So I'm positive.
There you go. The way we kind of structure this is kind of go through timely and topical. We spent a lot of time on that one item. I just want to make mention around, just real quickly, let's touch base on Colorado. Senate Bill 181, when we started doing the podcast, it had just been sort of introduced, and in this brief amount of time, it's really been rushed through. In essence, 181 is passed by the Colorado General Assembly. I think it had to have been almost 2 weeks ago.
Yeah,
week and a half or so, I think. I'd say the governor is expected to sign this into law any day. Right now, they're going through the rulemaking revamp process. There's not much more really to comment on. There's a lot of wait and see. Most companies seem to be having this feeling that they can work with what's been put forward.
Mm-hmm. And so there was this leading up to the General Assembly, this feeling that this was going to be a moratorium. It was going to shut down for a little while. That's been alleviated. We're going to continue to be able to go to work. Most of the overall, perspective of a lot of the clients we're working with and having conversations with is, look, we can work with this. We have to work with it, so we are. And ultimately, we want to be good stewards of the communities we work in. We want to be good stewards of the environment. We do that, and we will continue to do that and show it. And so, I think one of the things you will see in investor presentations that are going to come up is everyone's going to be a rural operator, even though they may not be. But you're certainly going to start to see everyone speak to themselves as a rural Colorado operator, and you'll have to decide for yourselves who's
we're nowhere
really
near
rural.
local communities.
Well, we're not drilling in Denver.
Yeah, right. It's not like it's going down Main Street.
But a lot of these assets that are outside of communities are certainly going to be drilled, probably not affected in any material manner at this point. And there will be litigation that will kind of clean this up, as there is with any bill that comes forward.
Yeah, I think the greatest distrust, at least within the industry in Colorado in particular, was that it was on the heels of a November ballot initiative that was an assault on oil and gas in Colorado, and suddenly this one comes along, and it's I don't want to say it was an overreaction, because that's not the case, but there was certainly the speed at which this was coming. People needed time to digest and understand and have dialogue, and I think they felt that they weren't getting that opportunity. So at least in a reasonable way. But anyway, that's the latest and greatest on at least the status of 181, unless there's any other color that you've got around it.
No, I think that really kind of summarizes it. It was very fast. I think that as you mentioned, the industry would have liked a larger voice in it.
Yeah.
But I think we're at a point where, look, let's go to work. And I think we're feeling that across even the other conversations that we're having with investors. People are ready to go back to work, and they have been for a long time. And so, as we went through 112, 181, we've got something where we can go to work.
Yeah.
Let's go to work.
Okay. So moving along, you mentioned that we've kind of been doing a lot of traveling recently, kind of hitting up the other industry conferences that EnerCom is fortunate enough to attend. I guess most recently, of course, IBAA's Oil and Gas Industry Symposium. I was in New York. It's going on this time last week.
And you got stuck there in the snowstorm that we had here.
Yeah, exactly. Yeah.
So you got to enjoy New York for a few extra days.
Yeah, Colorado decided to spool up a quick little blizzard, and I think 600 flights were canceled, mine included. So it was very pleasant in New York, though.
Yeah.
It was really nice. The weather held out for everybody. So in any event, got to go to the conference and, see, some good presentations, have good dialogue. I guess, and you were there as well, naturally, representing one of our clients. Overall, thoughts?
Overall, I think a lot of the same themes that we've kind of heard have progressed a little bit. Certainly, generation of free cash flow. If you can do it, we want you to do it. And the investors are preaching that, and companies can do it. We're moderating growth, paying down debt, or right-sizing balance sheets in any way possible. So, we'll still probably see some of that type of M&A activity, or debt exchanges, those types of things. And then share buybacks are something that have, continued to be preached forward. And then something that kind of an evolution of this free cash flow idea was, and I heard it more than once, was this: we're going to be EBITDA neutral in 2019, which is kind of a step back of, well, if you take out kind of the other things that we have, the interest, and we're going to kind of spend that cash flow.
Yeah, I mean, I didn't want to be the one guy in the room raising his hand saying, "What's EBITDA neutral mean?" Really? I don't know.
So, look, I appreciate the term, and I think companies are doing what they can do, and they're moving in the right path from that to say, hey, we're moderating growth, we're spending within our means. But I don't think they fooled anyone with this free cash flow to EBITDA neutral type of little bit of a shift. And I think a lot of that came from, hey, well, prices haven't been, as we came in 2018, prices were low, which means that our cash flows are going to be a little bit low on the production. So this free cash flow got pushed out a little bit further. And even for the companies that weren't going to be able to get there, now have this EBITDA neutral thing to be talking about. And so we'll hear more of that.
I was and sitting in one of the breakout sessions with a specific firm. It was a small cap firm, and these guys are. It was interesting. They were really impressed by generalist investors. To be honest with you, the guy was, admittedly a generalist, and he was really asking, very pointed questions and really driving management towards this answer the question around, hey, you know what, we'd like to see you guys, drive towards more free cash. And, you see the management teams are, they feel the pinch, right?
Mm-hmm.
They're like, if I can, and they were like, okay, well, if you're able to do that, what are you going to do with the extra cash? And they're like, pay down debt? You can do share buybacks. And sure, if we can. I mean, these guys are in this position where they're being pressed on it, and they're trying to answer the question, but they're like, oh yeah, we'll try and get there if we can.
Yeah, so. And it's the capital allocation decisions that these companies are having to go through, even to get to that free cash flow number, has a lot to do with what leases have I purchased, or what's expiring.
Mm-hmm.
Am I really okay on my midstream contracts if production declines? Because that's real money out the door. My hedging profile that I've got and that I've set up for the next 12 to 36 months, or really 24, I hate to say we'll drill for a hedge book, but certainly weighing for not having to pay for unused production.
Right.
And so as we ask companies to be long-term thinkers and very reactionary in the near term, these things are at odds. And so those are all things that companies are thinking about as we are going into the capital budgeting. We've set a capital budget, but as we get into this Q1 time period and we get our first check-in of that, how are we going to adjust? And companies say they can move it up very quickly, but do they kind of back it down a little bit in some ways too? So that was certainly there.
Companies themselves, some of the presentations, I don't want to say highlight because that's not necessarily the case, but ones I wanted to talk about was, there were some good presentations, no doubt. So, I guess, like a great presentation, but this was at Howard Wheel. Cimarex, I thought, gave a great presentation. IPAA, they weren't there, but you had companies like PDC.
Who actually had an activist, not, a little bit earlier, a couple weeks before, and continues to make noise. And so this age of the activist is here.
Right.
But, really good for PDC to be there, control their message, get out there and really make sure you're having a dialogue and not crawl into a hole, which we see a lot with companies.
That's exactly right. And that's, I guess, why I wanted to highlight a couple of these companies. I'm like, PDC, activist investor, you're out there, you're messaging. Another company that showed up and frankly could have stuck its head in the sand, but didn't, and that was Ultra Petroleum. So UPL, management showed up. They took the heat, but they showed up that they're in it, and their messaging on out is best as they can.
No, it was great to see. It's a new team there at Ultra. This was their first time as a unit going out and speaking with investors, and so they got to get out there and reintroduce themselves, reintroduce the story, reintroduce the Pinedale to folks, and it's a huge asset. I mean, $500 million EBITDA asset. And a lot of these companies would kill for that type of asset, and it's a gas asset that can do that. But certainly, the balance sheet strains what they're doing, and they're going to be proactive, and they're working with it. But another example of getting out in front of something when they need to.
Yeah, and I also sat in on SRC's presentation as well as the breakout, and I got to tell you, I thought that Lynn Peterson did a great job, meaning from just a pure leadership perspective. He showed up, he addressed the investors' concerns specifically around sort of, the issues around Colorado and Senate Bill 181, going back to that topic. But, he didn't shy away from it. He was, upfront, talking to everybody, saying, "Hey, we've addressed this, and look, we want to be in these communities. We work with these people. We're hand in glove. Making this work within our neighborhood and where we're at, and he didn't shirk from it. So I thought that it was actually a great way to come on out to everybody and really show confidence, show that they've got a plan, and show that they are working within quite arguably one of the harshest regulatory environments in the U.S. for oil and gas.
Well, I think it's a good leadership position that he kind of came out and said, hey, not only SRC, but we're going to be able to move this forward. And the DJ players have been put in the penalty box ever since kind of the whispers of 112.
Right.
And I think there's a real opportunity for companies to message clarity and a path forward with where we are with 181 to alleviate some of those discounts. And so, if I was a buyer, I'd be a buyer of the DJ at this point.
So as an investor, I guess the reason I was bringing that up with regards to the investors, multiple conversations around that, and they did express real frustration around companies that don't show up and present. Because I asked, we'd be at lunch, and it's like, hey, look, shoot straight with me. I mean, how important is it really for you individually to meet with company management face to face in your investment decisions? And I've asked this question multiple times, over the years. And ask them, what happens if you can't do that? And they all look at you like, well, yeah, it is extremely important. Management interaction, it's certainly much more fulsome, if you will, than just going through research reports and numbers alone. You can read body language, et cetera. And their biggest frustration is that, you can, as an industry, if oil and gas is going to sit there and complain that investors aren't buying, well, it's because you're not showing up and talking to us. Head in the sand strategy is not a solid strategy.
No, it's not. It really is a two-way street on that. Industry has to show up, and I'll challenge the investors to put their money where their mouth is.
Fair.
So, we need some of that investment. But what's really interesting on, we've talked about some of this travel and some of the things that we've been around. That was before this Chevron deal. And
right.
So there was I won't say record low, but kind of a depressed M&A market throughout Q1. We had, low prices in December leading into the first part of Q1. Everyone was kind of down. And that was from, companies down through investors. And when we felt some of that sentiment at some of the conferences that we've been at. That said, I think as we talked about earlier, that healthy M&A gives a little injection into the investor's eyes to say, all right, let's keep working here.
Yeah, more to come on that, right?
Yeah.
It's going to take more than one deal to, I think, and the reason I was just reading Eric Natal, his March commentary. So Eric is a partner at 9 Point Energy, and he's got his monthly commentaries that they put out, and the thesis of his commentary was asking the question around, is the energy sector broken? And within that, he talks about everything that we've mentioned here and have talked about for a while. And he talks about where he's drafted an open letter to the boards of, I want to say like 13 or so companies that he's involved with. And he's recommending the strategy of using free cash flow for share repurchases. His argument being like, hey, look, if you're trading at a discount to like your liquidation value, you got a good solid balance sheet and you've got the free cash to buy back a certain percentage of your shares outstanding, whether 10 to 30%. and yet you are unwilling to do so. Why the hell should I? Except he doesn't say hell. That was my added. Why the heck should I? And his he's like, hey, look, there's really no legitimate answer to that question. And so that's, I guess, con on the from the investor perspective. I guess I'm taking that side where I'm like, okay, well, I understand that perspective, but
Yeah, no, look, it makes sense. You kind of walk through this path and you say, look, return capital to shareholders. There's methods of doing that. There's a dividend, share buyback. Here's this one-time deal, and certainly we've done some work with our different teams and different boards of directors over the years as we think about that, and different boards struggle with it. One of the things that we came up with was you can't buy back shares if your company's trading for above essentially your finding and development cost, because now you have this capital allocation decision where you say, look, if I'm trading above what it costs me to drill a new well and bring new production online, my best use of proceeds, because I am an oil and gas company, not an investor,
right,
is to put money into the ground, bring that on, and receive that premium to that. And so that was really the lever that when we did some work with a few firms who were looking at that, all right, that makes sense, and that was another way to look at it. But we certainly have, and we did a monthly at the end of 2017, really looking at the art of the share buyback,
right,
because they were very popular at that point when prices were very low. Valuations were pretty similar, but prices were low. Should management teams be buying back stock? And people implemented these programs, did it, and the investment community didn't reward it. Valuations remained depressed.
Stock price went down.
Yeah. And so it's a balancing act. And certainly, Eric's well-reasoned. Certainly a lot of companies are doing it. We're waiting to see what that, looks like. But guys like Cabot could become a private company here at the rate they're buying back shares. And they're a great management team. But, that obviously too far, but they're very active on that share buyback front and trying to return capital to shareholders. They've implemented a dividend. They're really trying to be very shareholder friendly.
I'm going to reach out to Eric. I'm going to say, hey, look, you want to come on? We're going to do a one-on-one with you and Eric.
That would be awesome. I would love that discussion.
He's going to say, Glen, who? No. So, totally valid, and it's I guess we're gonna see how this shakes on out going forward. I don't know the answer. I really don't. I understand where he's coming from. I understand what you're saying, and I think companies are trying to navigate this and see how things play out.
Yeah.
So, I guess moving along, unless there's anything else we want to wrap up on that.
No, I think it kind of guides into what's going to come up next in some of our discussions, because that's one thing that boards are wrestling with at essentially every board meeting. I mean, we're sitting in on some of these board meetings, capital allocation, capital budgeting. What are we doing with free cash flow? Should we be buying back shares? Should we be reducing debt? Those are all things the boards are wrestling with. And you'll introduce it a little bit more, but we want to have a guest and some interviews with folks that are actually sitting in these boards and making those decisions.
Exactly. So upcoming for our listeners here, because we're running 35 minutes into this, what thematically, what do boards want? So we're lining up some guest interviews, and we hope to kind of tackle that very topic so we can get a little bit of color, and it's not just our speculation.
Mm-hmm.
So that I'm looking forward to that. I'm also looking forward to one of the things that we've mentioned this before is oilfield tech. I think I mentioned it in the first broadcast that EnerCom has had in the past this oilfield tech and innovation conference. We've had tech as a theme in our conferences, and we work with tech companies that it's enough that it makes sense for us to really insert that into this lineup on a more frequent basis, because I do think that we've got plenty of people to talk to. And one of those is going to be coming on up is going to be one of the guys who actually presented at our Dallas conference, Tom with Innovation Illustrated.
Mm-hmm.
And I want to say it's Tom Shakur.
Chikori. Yeah.
Chikori.
And so he's going to be talking, AI in the oil field. He's developed stuff with other operators. He's worked with IBM's Watson technology. Mm-hmm. He's advising boards, and so he's telling people how they should be thinking about implementing it. And so I think that's helpful for everyone to have that perspective of what are the challenges, what is capable, what is not capable, and really kind of flush out what is artificial intelligence.
And that's the risk, right? Is that I don't say risk for him or anything, but I recall the days of the buzzword was big data, and everybody you get in presentations and they, hey, we've got big data. You're like, okay, I don't really know what that means, and how is you operationalizing that, and how is it actually quote unquote big data, mm-hmm. Contributing to your overall success, because it just seems to be a buzzword, and that buzzword's kind of died off and it's gone away. And there's other ones that have come on up, and now the I won't say the buzzword, but it's AI, and people are like, man, that sounds super sexy. Artificial intelligence. Wow.
To me, it's a little scary. Like,
yeah.
All right, what decisions is this making? But Tom will let us know what he's thinking and what it can do.
Yeah, I want to know what his take is.
Perspective, I think,
and experience, and that's the one thing is that these guys you get the opportunity to talk to these guys who've worked closely with the IBM folks. I'm really kind of curious because I really want to ask him sort of the whole hey, what about like Elon Musk and his concerns around distrust AI, and get his take on it. So I'm looking forward to that. Yeah. So Tom's going to be coming on up here within the next 2 or 3 podcasts, and then we're also going to be filtering in some additional guests that I think is going to be overall interesting for people who are interested in oil field technology.
Yeah.
So, okay. As far as this podcast goes, I think we should probably get to the point where we can wrap this on up, unless there's anything else we want to mention or bring forward.
Let's wrap it up.
So first and foremost, I want to thank everybody for taking the time to listen in. Aaron, thank you for your time on this, and I want to thank those companies that that presented at IPAA and shared their stories. So it was good to see them, and that's it for now. So this will be the end of EnerCom's Oil and Gas Podcast number 3. So thanks for listening, everyone.